How's it going, everyone? And welcome back to Continues to Tick. So the markets are quote-unquote crashing, or so they always tend to say in these times, when the Red Sea appears and comes with a vengeance. And sure, there's a storm hitting us at the moment. Take a peek at the Dow Jones chart over the last 5 days, for example. Minus 4.81%, or about $1,700. Or my N1 portfolio over the last week, minus 3.65%. Also about $1,700. And I'm sure you have your own experience to share. But my question is how? How does this make you feel? Really? Are you like nothing's happening? Or does this all make you stressed? Maybe even change your mood? All perfectly normal, by the way. In a downturn market, we can't help but typically feel unbalanced. And maybe even just for a moment, feel as though we're no longer in control of our financial plans. Or as in control as we had hoped. The 2020 hindsight in the financial world, let me tell you, will always ruin your moments if you focus on it. I have my own stories of this. Tesla, Bitcoin. But really, I mean, what are we supposed to feel with shocking face thumbnails all over on YouTube, or the panic-inducing article titles on the media? Those things are there to try and force us to react on emotion, react on fear. And this narrative, at least in my opinion, should never really be the deciding factor as to how we make the decisions with our finances. It's a challenge after all, but it can be done. But nevertheless, here we are in a society that does happen to play this narrative and make it quite popular, but that's a topic for another video. I guess what I'm trying to get at is that mixing emotions with finances is all perfectly normal. It will happen, and it'll take a hold of us at one point or another, as we are human. But now what? We now feel unbalanced, we feel stressed, and we feel fear. We're in this storm together, all of us. Well, one of the many good things is we can invest for the future, which is one way to combat this. We also, given you watch this channel, mostly invest for dividends. We are dividend investors. We invest for income now and in the future, not just capital appreciation, although both tend to happen in conjunction with this strategy, sure. However, in saying this, our plan, if done thoughtfully, can be as bulletproof as you can make any investing strategy. And I'm really trying to capture this idea as I document the story on this channel. But it has to be done methodically, which is key. And sure, we won't be driving Lambos or shooting to the moon. Sorry, I had to do it. We won't be doing that with this strategy, as they say. At least not anytime soon, that is. Because of this, by not feeling the highest of highs in the market, we also should be avoiding the lowest of lows. We won't lose our shorts in the rough stretches of the Red Sea, and we also typically won't be the ones swimming naked, as they say when the tide turns. Our strategy is usually slow and steady. I like to look at it as even keel, or as I also even like to say it, boring and conservative. The B word. It's usually those with the biggest risk that take the biggest reward, but also the biggest of hits. And I don't know about you. I prefer to save my emotional strings from being tugged, if I can avoid it, and personally, choose not to invest in this way, and save myself from any higher amounts of unwanted, adverse outcomes. And man, maybe all we want is peace of a long-term financially stable future. That sounds great to me. That to me is my version of a Lambo and the moon. A future where hopefully money will be one less thing I'll need to worry about, and done in a way with the lesser amount of worries in order to get there. In saying all this, I used to feel a sense of panic myself when the markets would turn. But as many see it here, it truly is a buying opportunity to buy even more dividend-paying stocks on a discount. If you have the dry powder for it, that's key. Me, sadly, no dry powder. I'm paying for grad school now out of pocket, so there's that. But as I see it, for me, nothing has changed in my strategy. Everything I'm doing is actually happening on automatic with my supervision. So, all in all, let's try our best to not allow this market downturn to impact our mood, as we should ultimately get to choose how it is that we're supposed to feel. And just before we make way into this week's portfolio review, how about taking a moment to like the video and subscribe to the channel if you haven't yet already? And for the mind cleanser this week, how about this picture of Half Dome in Yosemite? It's still on my hiking bucket list. I'm curious, anyone here done it? And here we are in the Jesse's cash flow portfolio for technically what's going to be the last full week of January 2022. We currently sit at $46,531.12, and this is with an all-time return that's been slowly dipping at 32.38%, which is a total portfolio gain, which is also slowly dipping, of $6,322.90. It's dipping, but we carry on with our plans. Just to show you guys here, take a look at this chart, right? It's pretty good. And this is where we are. So this is why maybe you're also feeling what you feel when you look at your portfolio. We're all in this together. The markets are taking a hit, and we just have to ride out the wave. And as I showed you earlier in the video, this is our last week's performance. Minus $1,700. But out of curiosity, just to see which sector has been taking the biggest hit. And I hate to say as usually or as typical, but usually with the highest gainers. Sometimes with that accompanies the biggest hits, and it's tech at minus 7.81%, leading the way in the red. And as we make way into the dividend activity section, we are dividend investors at the end of the day. So ultimately, this is the part that matters. Here we are starting the week on January 18th, getting paid by Avalon Bay Communities, $7.27. Also on the same day, getting paid by Sempra Energy, $4.96. And also on January 18th, we had a funnel of $31.01. So pretty good snowball action. And then here we are on January 19th, getting paid $1.23 by Oracle. And also on this day, we had our $500 deposit, which is our game plan for the portfolio. It is our strategy. And so far we've been consistent over time. And on the same day, we had that funnel, which also included $11.48 snowball. So $11 and a $31 snowball here. Together, that's $42. So that's a pretty good snowball action for this last week. It's not uncommon to see that nowadays in this portfolio, which is really neat. So that's going to be it for this week's video. As time continues to tick, the evidence is that we're now in the last week of January 2022. But that's how time moves. You blink and it's gone. And it just happens to feel that the older you get, the busier you get, and the quicker time slips through your fingers. But anyways, we made it through 7 days. Let's see how these markets continue to react over these next 7 days. Let's continue to keep our heads up. Stay the course. Stay on our own individual course with our game plans. And stay systematic. And we should be okay. And once these 7 days pass, I'll see you then again. As always. And as always, take care.